Hi, Jeff. Welcome to the show. How are you doing today?
I'm great. Thanks for having me on the pod here. I like it.
Fantastic. Thank you for being here. I know you're a very busy guy. Can you please introduce yourself to our audience? Who's Jeff? And we go from there.
Yeah, my name's Jeff Thomas, and I'm Group Head of Development at KingSett Capital.
What does that mean?
Yeah, KingSett Capital is a Canadian private equity business that invests only in Canadian commercial real estate. Sometimes when we do that, we undertake development activities and we undertake those activities in joint ventures with partners. There's projects that we do in-house, and we also have a lending business that lends to developers. So those kind of areas are where I get involved with our business.
Gotcha. So your personal background is not development. You come from the world of brokerage. You've worked there quite a while. You sold your brokerage, I believe, to Wickman, the Cushfield team there, if I'm not wrong. Walk us through that. How did that happen? How did that transition? Why the transition? What was that like?
Yeah, good question. So the business is called Ashler Urban, and there were myself and three other partners, and we had a great experience working together and growing that business. I was running the business as the managing partner, and we decided to sell it to Cushman and Wakefield, so large global commercial real estate services business. And for me, I really enjoyed the part of being in business and not just the transaction side. So, once we kind of did the transaction, I started to get a little bit antsy and needing a little bit more to do, and I explored a number of different things that might have been a good fit for me. And ultimately, the opportunity came up to come to KingSett, which is a great platform with great people, and also gave me the opportunity to kind of be an entrepreneur in a larger platform. So that's allowed me to help develop some ideas like our affordable housing fund and our joint venture fund for sale condos. So it's been great, different,
What
but it's
were
all
some?
people, despite the fact that
Yes,
the
yes,
development business, is a different business than the service business of brokerage. Ultimately, it's all about, people and building relationships and working with others to kind of achieve, your objectives. And so to that extent, these things are quite similar, even though, on the development side, you're far more into the details of exactly how things are getting done and completed, as opposed to the idea of how they might get completed. So different in that respect. But in terms of bringing together a team and partners and getting people on the same page, those are the skills that I had that hopefully are helpful, to the business here in my role today.
I'm sure they are. Just for context, I've been involved on the development side, but not the other side. What would you say is the main difference in the types of relationship or the length of the relationship that you're having? Like at the end of the year, you're right. Like on development, it's definitely a team sport. You have dozens of people, if not hundreds of people, involved in the development project from beginning to finish. How is that different, or maybe identical to the previous setup?
Yeah, I think in any business that's successful, you have critical relationships. It's like the old 80/20 rule where, 80% of your revenue comes from 20% of your business. You always have critical relationships where you're spending, if you're successful, you're spending more of your time with those relationships and building them. And so if you talk to enough brokers, you'll find out that, oh yeah, most of my revenue comes from, one or two, key customers, and it's not so different, I think, in our business where, we rely heavily on some key partners to do a lot of the scope of work that you're talking about. So if we're developing something in-house, we're relying heavily on our construction partner for its relationships, and to get, you know, the leverage out of, what they have to offer. That's one of the things that they have to offer is great relationships in the industry, to get things mobilized and execute. And so, for us, that's critical because, we have a lot of things underway, probably over 55 projects across the country right now that we're working on in various phases, stages, shapes, and sizes. But my team is probably about 8 people. So, we're not managing everything in house. We are relying on, partners to do so much of it. So, from that if you think about it in that context, the worst thing you could possibly do is micromanage, all of the 10,000 things that are happening at one point in time. And the only way to get a lot accomplished in business is to trust that somebody's going to do that. Now, it takes time to build trust. So, the best relationships we have, span decades. And so that's allowed us to get to a place, where we have a high degree of trust, where we can let a partner of ours operate.
I like that word trust. I think John C. Maxwell has a great book on leadership, and he defines trust, breaks it down into, basically makes an acronym out of it. And the T, the first T in trust, in his definition, stands for time. And that's what you just said. Like, the more you spend time, the more length of time you spend time with people and do business together, obviously that helps build the trust even more.
I like the Blake
With
Hutchinson, business travels at the speed of trust. Because if you don't have
business
trust,
travels
everything
at the
goes
speed of
really,
trust. Yeah, that's
really
true.
slow.
Very true.
You know.
Yeah, that's good. That's very true. And like, you just got me thinking. Yes, very true. Like, I've been fortunate enough to work with some of the clients for like fifth project or fourth project right now. And the first project was a little bit bumpy. The second project got better, but not by time fourth and fifth, like, we kind of finished each other's sentences in a professional way, if you may, and that really helps speed things up. So yes, you're right. So with that being said, 55 projects all across Canada, a large team, a lot of risk, a lot of opportunity, a lot of things that could go right or wrong. I guess let me go zoom out and say, how do you decide which projects to go into? What does a good deal look like from your perspective?
Yeah, I mean, I think you're making my palms sweaty already, because in the operating world, you
I'm
sort of
not
you
trying to
wake
do
up
that.
scared, and it only gets worse as the day goes on, right? So there's all kinds of risks that you accept and you undertake when you go into an investment. But I think, and we'll see this more as things happen with AI, like underwriting the financials of a deal, or it's a lot of work, but it's relatively an easy process. The things that are difficult to quantify, are the risks that maybe exists with, a counterparty, or something you think you know a lot about, but you don't really know a lot about, and you overestimate, what the assumptions are about how simple it is. Um, so in my experience, the things that I've seen, that go bad are all to do with that, where, you might not have the experience you think is required, or underestimate the amount of experience is required to fully underwrite those risks. Because if you sort of, I'm just making up something, hotels, they always have these economics, and this is how they should work, and so you should invest in this hotel. But if you've never run a hotel, you're really relying on whoever's running the hotel to make sure that those economics work. And have you ever done something with them? And are you aware of, how that relationship's going to work, and how you'll get the income stabilized, and what your ongoing obligations will be? And so I think people often underestimate, risks, misprice the risks that are in front of you, because they're maybe not showing up in the model, because you actually don't even know how to underwrite the risk, because you've never seen it before. So, we work pretty hard at that. I think one of our advantages in the Canadian marketplace is that, we've got a great team that's done and seen lots of things with lots of people across the country. So we'd like to think we're pretty good at assessing, some of those risks. But we're not perfect, and like sometimes, it's happened before where, you put yourself in a situation where you thought you understood something a little bit better than you do.
So is it fair, if I wanted to summarize the answer, is that because you're basically swimming in an ocean of risk factors, you're trying to minimize some of them by picking the right party and having the trust, like you mentioned, that that party is going to take care of those risks or minimize them or mitigate them. Is that a fair
Yeah,
way of putting it?
absolutely. And and trust is also anchored with transparency because like everything's not going to go perfect. And
Very
so
true.
huge red flags, with partners or potential partners when you're not getting the imperfect message right away. The worst of all
Yeah.
sorts of facts is like, well, we realized this a couple of months ago, but we kind of thought we could figure it out and fix it, but now here we are, and it's like way worse than it might otherwise have been. You know, we fully expect there's going to be bad news, right? Like there's always risks and things happen, and so how do you handle those, risks you know, uh, with transparency, accountability, and honesty? When I was a broker, my partner and I, we had this deal. We were acting on behalf of a landlord, and we did a pretty big deal. I think it might have been an 80,000 foot deal. And in the deal, we totally overlooked something that I think was going to cost the landlord another 10 million bucks.
Wow.
And so
Pocket change.
we were like, oh my gosh. So what do? Nobody's noticed this thing. So first of all, we went to our client. We're like I just, we just noticed this. This is like the worst possible thing we could have missed. Like big mistake. So he acknowledged it, and was like very appreciative that we were, upfront and forthcoming with him. And then we went to the counterparty and said like, I don't know, like we totally screwed this up. Like this is not what we really want to do, and you can see why. And you know, that transparency helped us build trust with the other side as well, because we admitted we made a mistake. We could have just said, okay, like let's get a lawyer and argue about it, but we were able to get to a solution much quicker. So if you don't have that, um, when the phone is silent all the time, that's never a good thing because there's always things that come up.
That's actually that's a very rare thing that happens. And to your point, I was the transparency and the quality of the messages that are coming through, and the fact that you don't want to hear the cleaned version of the reality. That really helps. That really helps with, even for us on the construction side and running the construction side of the projects. You always want to get to the bottom of things, not the cleaned version that people think you want to hear. And because it's typically missing some context. Interestingly enough, I was listening to Uber's CEO not too long ago, had a episode on podcast, and he basically said the same thing, that the one of the keys to success at Uber has been transparency from ground up, and the fact that try to communicate the non-cleaned version of the mess so people can actually do something about it. With that being said, there when you go through KingSett's verbiage and website and the documents that you guys have out there, there's something that it keeps coming up. It's a premium risk weighted return. What does that mean? Like, what for layman terms, for someone who's not necessarily in the financial world, what you guys are offering in our investment opportunities in terms of, and it's called like it comes up as risk weighted returns. What is that?
Yeah, I think I touched a little bit on this before, which is just the concept of pricing risk, accordingly. And so I think that if you were to look at the historical track record of what our returns have been for different things, you would say, well, like that's pretty great. But if you also overlaid, how much we're managing the risk through our, proactive style of asset managing, and through our, deep understanding of the Canadian marketplace relative to the risks that you're taking on, the returns are maybe even better than you might have otherwise hoped, right? Because you could look at a different business that might have, the same sort of return objectives, but, it might bounce all over the place and be more, volatile. So that's kind of, what's sort of guiding us, where we're always trying to underwrite the risk, as well as we can, given our expertise. And we think, the result is that, there's a premium to the returns that we're getting relative to the risks that you're taking on, which is, there's
So
not
you're
really a
you're
great way to quantify that. I mean, it depends on your appetite for risk.
I guess that means that translates into less surprises or fewer surprises down the road for investors and the returns, and potentially the fact that you've analyzed risk enough and built it into the system enables you to be more proactive, like you said, and make better decisions
Yeah,
knowing what they are.
yeah,
Is that a fair way of putting
yeah.
it?
That's exactly part of it.
Fantastic. Okay, I want to dive into 50 Wilson Heights. This project is a massive project that you guys are doing, and there are a whole bunch of different partnerships going on. Can you walk us through the project? It's a big project. I think it's an important project because it has lots of moving parts, and it will set up some precedents for other people and other projects, hopefully, to come in the future. Can you walk us through that project, what it is, units, partnerships, structure, where we are,
Yeah,
and we'll go from
we're
there?
we're really excited about 50 Wilson Heights. You know, the genesis of this project is really the city of Toronto deciding, we have some excess lands, we would like to build some affordable housing on these excess lands, and identifying this site in addition to a number of others, um, to run a process and find some partners who would, acquire the site. In this case, it's a prepaid ground lease, for market terms. So they don't, you don't know what the market price is. So this is why you go out for an RFP and you get bids from different groups. And then the city is doing its best to assess counterparty risk, like we were talking about, that somebody can actually do what they say they're going to do. And, also that, that they're getting the best value for a taxpayer dollar while doing it. So, you know, the requirements for a deal like this are pretty onerous in terms of its impact on the financials, because there's about 750 units here in this first phase of this project, and half of them, are affordable. So, in order to actually get something built like this, you have to be able to really understand, the model, which is driven by, financing obtained from the federal government on its balance sheet. So you sort of need to understand, whether you can get the funds, what that deal structure will look like, how long will it take you to get that, how long will it take you to get to a point where you're pretty confident on your costs, and what degree of tendering will you have to be at, or drawings, and then you're taking out a lot of the risks in doing a project like this, because a number of the units are affordable. You're doing amazing stuff for the community, which is pretty cool. We make commitments to do things at our suggestion that were to have, the project be sustainable, and we're going to have geothermal. So all of that is super exciting. But ultimately, rental buildings are a very scary thing, because typically, you spec the costs, you spec the takeout financing, and you spec the rents. Like three massive guesses that you're undertaking in development, where, if you think about condo development, you're not really specing most of the revenue. You lock it in early. Um, you're not really specing the takeout financing, because purchasers are doing that on their own. So, and you're maybe taking some risk depending on how aggressive you want to be on costs. But in apartment development, you're taking on all the risk. Like it's quite risky. So this program is helpful in that um, the low cost financing lasts for 10 years. You don't have that kind of risk. So, and not all the rents are market rents. And so it's helpful because, back to risk adjusted, risk weighted returns, the returns here are lower, but relative to what you would expect, for a typical apartment building, some of the risks are allayed because you don't have as much of many of the risks, that are there. And so we really like, that business itself, and really want to grow it. It's complex because you have so many different counterparties. We have, counterparties at different parts of the government. We have counterparty with the CMHC loan. We have different counterparties at the city, housing secretariat for how do the affordable units work, planning department, all of these kinds of things. And it's quite complicated. We had over 50 agreements that we signed to start this deal. Before we get to, signing construction agreements with trades and things like that, just to kind of quote unquote buy the land, finalize the land transaction. So it's super complicated. I think it would be great if a lot more projects like it could happen, but it just needs to get a little bit simpler, in order to allow groups to do that easier. We have some more of this business and this work underway, which we hope to expand, but it's very onerous and time consuming. So it's not for the faint of heart.
That's what I gathered from the 50 agreements before getting started. So can you tell me what stage are you at right now? How long have you been involved in this deal?
Yeah,
and
right
what
now
stage are you guys
we're just pouring concrete. We had a little issue called snow and freezing cold weather, which really has
Yeah,
sort of
that's a surprise.
wreaked havoc with the structural concrete that's down at the bottom of the hole. So you've got guys with shovels trying to dig it out. Really, it's sort of
Most fun
breathtaking.
exercise.
We
Yes,
haven't had
yes.
those exact kind of conditions in Toronto for quite some time. So I think crews aren't quite prepared and don't have maybe all of the equipment that you might have if you were in, say, a different part of the country. And it hasn't been fatal. It slowed us down by a few weeks, but that's sort of the narrow issue of where we're at. I think we've got 3 cranes installed and everything is really starting to move. We've got our hoarding around the site, which is pretty neat. It's a bunch of artwork if you ever get to go by it from the students of a school that's in the community. So it's pretty neat. And so as we continue
Yes,
to
that's
move through, we'll have more partnerships with different not-for-profits that will, add to the community. And so it's a really cool model, and we hope we can do more of it.
That's pretty exciting to hear that that's moving. So looking back at these 50 agreements and getting to this point, if you were to document some of the lessons learned for yourself, your team, or for our listeners who might and hopefully who will eventually enter into these types of partnerships, because I think, as you mentioned, this is a great opportunity for city to basically underutilize, or properly utilize the parcels of land, which there are not few. There are quite a bit of them around the city and even further out in the region. What are some of the lessons learned from this process and all the agreements and all the counterparts that you've dealt with?
Yeah, I think it's one of the key things to really understand is, what are firstly, back to counterparty, what is your counterparty really looking to accomplish? And sometimes that's not clear because there are, conflicting messages around what's really important. So actually trying to drive to that point first is kind of the most important thing. So if you have understanding and transparency with your counterparties about what they're actually trying to do, that's constructive. And then once you get there, getting to the point as soon as possible where you actually see and understand documents and the way that, intent is actually getting pushed down through to the project at the agreement level, because there are so many details and they don't always work together, with other, agreements or departments or other policy objectives. So, you've got to be respectful and patient with those things, but also extremely urgent because, they're all connected and it can drag very easily.
And
So,
I can only imagine, it's with the number of parties involved and the complexity of the situation it has, and everyone can get really creative in things in terms of things that needs to be allowed for, accounted for in the contracts and agreements. So I guess building on that, we not too long ago we had someone from CMHC on the podcast, and we went through their most recent report on housing for the 2026 to 2028. market and their forecast, basically. How are you seeing that changing? Like, what is your take on it for the next 2-3 years on the market conditions? How are you guys underwriting projects? Obviously, we know at this very moment in time, the condo market is not, if entirely dead, is very close to dead. And what is your take on that? What is KingSett thinking in terms of underwriting new projects?
Yeah, I mean, very difficult to underwrite any condo project starting right now because, you know, especially in Toronto, I mean, there's a tendency to sort of normalize across the country, but there's a lot of different things happening right now across the country. And Toronto, which is where a lot of our activity is, it's dead. Like it's very dead. Um, I think there's maybe a bit of a pulse with, customers on resale low rise. I feel this spring will be interesting to see if that sort of starts to perk up. But there's a massive delta between sort of a resale price and a new launch price that just can't be bridged right now, depending on your perspective. Like it's $200 to $400 apart, whatever that number is. And so there's not really many levers left, because as a percentage of total project costs, hard costs, even though they're coming down because soft costs are such a big part of it, they've come down considerably. Even if they came down a bit more, that's not enough to quite, bridge the gap. So unfortunately, we're sort of stalled in a situation where we don't have the best psychological purchaser environment. Like, look, just it's March 3rd. Like, what's going on in the world today is pretty crazy. Canada's relationship with its largest trading partner has been a little crazy. We went through election, and now we have a new prime minister, and I think maybe people are feeling a bit better about it, but it's still uncertain whether or not we can actually do all the things that he says he wants to do. And so, we're in a little bit of period of uncertainty on the customer side. And, we're sort of stuck there. And, there's so far has been no real political will to change the structure of how we're funding municipal infrastructure and through housing, which is the only thing really left to change. We've had a massive land value reset. In many cases, you can get some land for next to nothing if you want to do that. We've had a pretty major reset in construction costs, but many of those costs are not really in our control, in the Canadians' control. We've got a large international supply chain in many respects, so like there's only so much further those can fall. So like the only thing left is sort of fees and taxes, and it sort of sounds crazy to keep talking about it, but I don't see the market kickstarting on its own without those two things, some adjustment, in development charges and HST, full stop. Although the first time buyer HST thing has happened, we'll see if it's enough to make a difference.
To your point, the HST just the good news, I guess, on the HST for the first time home buyer rebate was increased very recently. Still, probably takes time to make its way to the actual ground, and we see what the actual implications are. If I want to go and look at that, look at the current environment, and you say, okay, this is what we just talked about. Condos are not starting. The purpose-built rentals are pretty much the only thing that is happening, if that is happening. Are you, or like if you're talking to a smaller developer, if you're talking to someone who's been trying to or is trying to get a smaller 6-story 60-unit building going, because that's what City of Toronto is these days focusing on, they're allowing it, the whole discussions about the major streets and everything else. Do you have any suggestions, red flags, or maybe just would you tell them to stop and don't do anything for a while, or how would you advise them? If someone wants to start a mid-rise project these days, regardless if it's condo or PBR.
Yeah, I think that it's a really interesting time in Toronto to be thinking about projects of that scale, namely because the capital markets world is difficult to even get financing for larger things, due to headline risk and people just worried, about all the things we've already talked about. So, even larger developers are talking, hey, smaller projects might be the right kind of thing to do right now. But, the thing I like, especially if you're growing your business and, thinking about moving up to a scale to do projects like that, ultimately there's only one thing you really need to know the most, which is what does the customer want and what will they pay. So, the rest of it is stuff that you do have to figure out. And like I said, I said before, if you're doing something new that you've never done before, are you properly analyzing and assessing all of the risks? So to the extent that you're moving into new territory, it's not just the same as what you kind of were doing before. Like it's different, and there are different risks and you'll have different trades, counterparties, lenders, like all those things are different. And so, you'll have a lot of work to do there. But the great thing about a 60 unit building is like, if you can't meet 30 people who are going to buy or rent there and you don't know who they are, you shouldn't be building it. I mean, that's generally true about anything. But a building like that that's going to be a community driven kind of building generally, you should be able to get a handle on that narrowly in a way that larger groups probably can't do. So that's the competitive advantage of doing smaller things, is like, hey, getting closer to customers. Like, I can't believe how many larger builders that I know like don't even know any of their customers. Like, oh, there's a broker, he sells 10 units a year of my buildings, and you're just like, yeah, well, like, who's your best single purchaser? Like, I don't know. Like, it's just kind of crazy to me. So, getting close to the customer, knowing what they want, is an opportunity to, deliver, better product that's more, tailored to what the customer needs, that's priced to what they can afford. And when you do that, you take out tons of risk. Because the biggest risk right now is, are there any customers and what are they going to pay? We all know what the financing kind of will be right now. Take-out financing a little bit different. And we all probably feel that costs are going to be low, or maybe a little bit lower by the time you start it. It's what is the customer going to do? So if, as a smaller builder, that's a huge, opportunity to kind of wrap your head around and get in front of, because larger builders are not always great at that.
I love that answer. It actually reminds me of a quote from Airbnb founder. I think his name is Brian Chesky. And he said, focus on the unscalable. Because to your point, the things that can be scaled, bigger boys have already figured out a way to do it. The things that cannot be scaled, such as the ones that you were just mentioning, going and meeting the local residents, getting to know the community that will potentially buy those units or rent those units from you. That's not something that you could do at scale, but you could do it at a 30 to 60 unit range, and it's definitely possible. It's probably not, it's not going to be easy, but it's going to be doable. It's definitely doable. So I think I take that as a great advice there. Can we talk about your focus on modular? When you and I were talking offline, we touched on your project. I think it's in Valhalla. It's called Valhalla Village, if I'm not wrong. And you guys are using modular. Can you talk us about that project? What are the parameters? Why modular? How do you like it? What are the challenges?
Yeah, I guess first thing, we've just finally, branded the project. So you now see branding. It's called West Square. I don't know. I guess the marketing people thought
Gotcha.
Valhalla was a little too Thor, Marvel MCU or something. But it'll be called West Square. And the West Square Phase 1 has two buildings. There's a high-rise traditional kind of poured concrete, and a more mid-rise kind of 200 unit building, that's modular. And by modular, I mean it's precast construction, precast concrete, floors, columns, walls, and that's what we've utilized to get it done. Now, it's been highly effective, at delivering quickly, saving a little bit of money, and introducing some standardization to the process. So we would do more modular buildings. The quality of it, I think, will be great. We're learning as we go on some issues that we've had to get a little bit better at, and the next time we'll tweak here or there. But the building will be great. And I think that the one thing modular has going for it in Canada in particular is that construction has sort of been crippled by policymakers who keep wanting every single thing to be different. Over here, I want a building and it's got to have this shape, and over there, got to have this shape. And, it's quite impossible to think of a world where we deliver affordable housing for people when really what we've mandated someone to deliver is like a custom built home. Like, but if you just sort of said, hey, like every single Canadian who buys a new piece of housing, it's going to be a custom built home. Like how crazy, does that sort of sound? But we've sort of gotten ourselves to that place. And so the refreshing thing about modular is this idea of like, well, look, this is the shape. This is where I can put it. Does that make any sense to you, planning department? And it's kind of funny. There's more willingness to kind of work within that. When a typology that everyone wants to see more of can't really change, I mean, it's allowing for more standardization. The industry already can build the same building over and over and over again for way cheaper than we're building things right now. We're just not allowed to. So, I think what's interesting about modular is it's sort of allowing for some of that, to occur. Um, so it'll be interesting to see how it
It,
evolves. We'd like to do more of it. Federal government wants to see more of it. Um, Despite me just saying, what about just like having as of right approvals for building the exact same building you've already built before, provided it met code in the last 10 years and you delivered it and you built it and got the drawings here. Prime Minister, what color would you like it in? We'll just build the same one over there. It would probably be significantly faster. Maybe you wouldn't get all the same benefits of doing something modular, but you can also build bigger buildings that way too, right? Modular concrete, you'll top out at maybe 20 stories or something like that, but you can build 30 or 40 stories with the same designs and if you were allowed. So I'd like to see a little bit more of that come from the policy side.
I think one of the things that has happened over the past 10, 15 years is that we kept adding and adding and adding and increasing the number of criteria to the pile of criteria for approving a new building. And we started, I think one of our previous guests put it very nicely, that we started optimizing for 100 different things and we forgot to optimize for the actual affordability of it. Is that like you're trying to get everything under the sun to the perfect degree possible, but then you just can't build it. You can't get scale. You can't repeat it. Every building is going to be different than the next one. And to your point, I can definitely see where you're coming from, because the modular, by definition, is putting some constraints on some of those variables and say, listen, we just can't do that. So don't ask us to do that. If you're in the municipality, if you're asking us for curved corners, we just can't do that if you want us to do it in like mass timber or CIP or cast in place concrete or sorry, not cast in place, the precast concrete walls and floors. So you kind of have to make a trade-off, and it gives them, I guess, I'm ranting here, but it almost gives them an excuse to say, listen, what do you want me to do? These guys can't do it any other way. You have to stick to the criteria. And it reminds me of that old saying that no one got fired for buying from IBM because there was no other option. Like, this is the
Yeah,
option.
it is a
You
little bit
buy
like
from
that,
them
right?
and
We were talking to a
yeah.
municipality once, relatively recently, and we sort of said, like, we think we could do something over here and it would be affordable, and the site is already zoned, but it has a number of constraints related to like setbacks and, you know, and heritage and like a carve out for like a pop space. And we just said like we could do this, we could make it affordable, but like all of these things, like you're not going to change those, are you? Because like they were so important. We like fought about the right mix. Some of them were already as of right, but like are kind of were like embedded principles in land use policy for that community. And they were like, "Oh no, yeah, we'll do this." It just started going, "Oh my gosh, this is so wild." But I think and it's a slippery slope, this discussion, because I've gotten into it with policymakers before, because none of the policies in themselves are bad. You know, I
Agreed.
think if you just stopped making any new changes to anything, you would find that people do get more efficient and do get cheaper and do get faster. But it's when you change one thing and then change a different thing, those two things could change the whole project design. We've all been in meetings like this, those of us are in the industry, where you're problem solving for these like new variables that are like at the margin for improving things, but they do improve it. But to just back to my point, to acknowledge anything built in the past 15 years is probably pretty damn good, given how many regulations we've added since 1965 when we were building, 20-story buildings all over the country. Like we just said, stop. There's nothing new. Like I think you'd find costs will come down, things will get done faster, you know. So it would be
I
nice to
th- I,
see
th- I
some
think
of
it's
that thinking, but I don't know, it
it's not
seems to be a
happening
long way
yet,
off.
and it's yeah, it's not happening yet. There seems to be missing some political will. It will upset a number of stakeholders on the grander scheme of things, because they're always pushing for changes and improvements, which I can definitely, like you said, no single policy is probably bad in itself. It's just when you add 1,000 of them together and try to make a project pencil, then that's where things go wrong, because it just doesn't work. You don't have that much money to split between all those criteria that are eating it up. Going back to my avatar for a new developer who's doing a mid-rise project and who's trying to put together, if they want to come to you and for some sort of partnership, either financing, JV, you name it, whichever would be possible. And it might not be on that one project, which might be too small for you guys. But at some point in the future, they want to aim to come and talk to Jeff and say, listen, we want to do something with KingSett. What would they need to have at that point in time to make them a good candidate from your perspective? And I'm mainly, I know we talked about trust and track record and reputation, but I'm mainly also asking about systems, infrastructures, and stuff like that. Do you think about that stuff, or like, what do you think about when someone comes to you and asks that question?
Yeah, I do. I know that you're trying to go in another direction here, but it really is a relationship thing. So, like, you got to start somewhere, right? So, like, even if it's something that's too small, like reaching out and saying, "Hey, is this something you guys would do?" We're probably going to be like, "No, maybe that's too small, or maybe we could do a loan for it or something." But if you don't start those things, um, that relationship, that dialogue, like most people don't just like walk in off the street and we go, "Hey, yeah, let's do something." I mean, you've developed a relationship over time and some trust to do with it. Um, on the joint venture side, our stakeholders, for the most part, being institutional investors, like they're pretty complicated in terms of, not that they're complicated, they have high expectations on what the degree of reporting is. And by extension, we have high expectations on what the degree of reporting is. So what I have seen, over the years is, somebody does have to have enough back of house to handle being able to communicate financially what is happening at a moment in time, in a way that's commensurate with the higher level standards of the industry. That to me is something that's a simple way of saying, are you kind of there yet to be able to do that? And we've done, deals with groups who've been on that trajectory who like weren't there yet, and we've helped, get them there, which has really helped them grow their business, because then they've moved to a spot where they do have the capacity to to attract institutional capital. And so we've got like lots of time for that, but that's the fine line to think about as an operator of a business, about whether you're kind of like there yet or not. And again, those joint ventures will be for larger things, not smaller things. And so on the lending side, I think it's more market driven, and people.
Let me ask you this question. When you look into the future and or the current situation in the market, are there any industry trends that you feel excited about that you see? You know what? Yeah, we're in hard times right now. Markets are not where they need to be, but in 1, 2, 3, 5 years from now, this is going to happen. Yeah. Do you see any of those trends that gets you going?
Yeah, actually, there's a lot I am really excited about right now. I think in broadly in the market, I think what's really cool is just, we had this lack of expertise in Canada for people who were building rental buildings. Like there are a small handful who've continued to do it over the last 40 years, but a lot of new businesses that have grown and grown relatively quickly around rental and more people looking to do more rental. And it's a lot different than doing, a high-rise condo versus high-rise rental, and
100%.
needs a different skill set. And so I think from an industry perspective, like it's super cool that, we've got all kinds of people and businesses who are like learning and obtaining these skills, which quite frankly, make you a better developer because you have to compete, take on a lot of risk, articulate and underwrite very narrow margins, which you've got to be perfect on, and frankly, probably over a period of time, the industry grew so much and probably got a little lazy. Were we competing head to head really well on, some of the condo product? Like, I'm not so sure. And so I think we're going to emerge through this, at a point in time where there are limited amount of supply coming online, some rentals coming online, and then a whole industry that knows how to do this extra product type a whole lot better, and so I think, you know, the customer will return. It's an inevitability. Like Canada will continue to grow at some pace. Toronto is likely to continue to grow at some pace. We will continue to have lots of old and obsolescent things that will be replaced with newer things as well, just out of obsolescence. So there's going to be like a lot of work to do. And I think the industry will emerge more resilient and stronger. And hopefully also on the construction side, we'll have an opportunity for teams to sort of retool and reset and, get their A teams are great and they're busy and they're working, and their B teams have an opportunity to sort of reset and get, tighter and better so that you come out of it with two A teams. And, that allows for a lot more productivity as well. So like, I think the future fundamentals of the market in terms of supply demand, super favorable. I think as an industry, you always emerge stronger when you emerge from a tougher period of time. And we're picking up a skill set that, not too many people had before. So, I think, and that sets a table for different creativity to do different things. And so we should emerge doing a lot of really exciting things, I think, in the future.
That's good news. Thank you for sharing that. We have a closing tradition on the podcast. We give you a magic wand for about 5 minutes, and we ask you to make a wish. And that wish, just whatever you like, in terms of getting us in a better position in terms of our housing crisis, affordability, and it could be changing regulation, it could be policy, it could be a mindset shift, a paradigm shift, whatever you want it to be. What would that wish be?
My wish would be that policymakers would recognize and prioritize housing rather than just say it. So there's all kinds of things that you can do, but it's too much posturing. I would be ecstatic if people would just realize it was something they actually wanted to do and go do it. Because the government can do amazing things when it wants to. And if it wanted to do something, it would have.
Amen. Amen. Thank you for the wish. Thank you very much for being here, Jeff. I'm hoping that we can have a part two of this conversation in a couple of years and have better news
Sounds
and better
good.
market conditions going on there. Thank you for your time.
We'll get through it.
We'll get through it together. We're all in together. Thank you.
Thanks.